Hi, I'm Dave Brickell, Director of Sales at Paradigm. Welcome to The Big Picture.
Vol is mean reverting, so the obvious trade is always the expensive one to
this
carry.
whole peak inflation, peak rates narrative, peak Fed, which we've been
talking
about.
War, it's an expensive place to find out. Crypto vol, a potentially fatal place to find out.
The crypto option markets are definitely showing some signs of life.
Hi guys, welcome back to The Big Picture. I'm Joe Cruey here at Paradigm and back here again with my co-host David Brickell. Today, very excited to have Simran and Matt on from GSR. I'm so excited that I even wore my GSR t-shirt today. I think I got this down in what was it, Consensus in Austin last year, kind of right before like all the lending stuff blew up. So I think that might have been like the last time I wore this thing. So hopefully this isn't like a precursor of what's to come in crypto again. But yeah, love you guys. Love what you guys are doing. At GSR, we used to have, back in the day, Chris Newhouse on the pod, before he went back to grad school, and always represented you guys very well. So looking forward to continuing to work with you guys and, partner around content. So kind of just to get started, if you guys can, please just give a quick background on, your journeys into the crypto world, what you guys are doing at GSR. Simran, if you want to go first.
Sure, yeah. So I've been with GSR for just over a year and a half. Background in traditional finance, this is often the case. And so I was on the oil options desk at Goldman for a few years, and GSR having been founded by two commodities traders from Goldman, the legacy of client service, franchise, risk management, all of those things were very prevalent. So when I eventually made my decision to go down the rabbit hole after reading numerous DeFi articles, and getting a sense of, what is it about the space that's attracting so much talent and not just money, I decided to join GSR. And so over the past few years, post year and a half rather, I've been focusing on our product and business development teams, namely looking at our suite of OTC services on spot, programmatic execution, and derivatives. I'll give it over to Matt.
Awesome.
Yeah, I similarly, I similarly have a traditional finance background. The majority of my career was at JP Morgan. I covered alternative investment strategies. So think the broad suite of hedge fund allocations for our broad global private bank wealth management client base. Towards the end of that, I actually helped with the process of sort of onboarding the first Bitcoin hedge fund for those clients and started moving a little more in that direction. Left to a different asset manager to lead up crypto research at a firm called Global X. Actually went through the process there of filing for spot Bitcoin ETFs, Bitcoin futures ETFs. Was the portfolio manager on a Bitcoin futures ETF there. That was a pretty brief tenure when I got the opportunity to jump fully into crypto at a more crypto data firm like GSR. And I've been here ever since. Been here just about as long as Simran, about 18 months. And I spend the vast majority of my day just writing crypto content, daily market updates, monthly market recaps, and research pieces pretty broadly in crypto.
Awesome. Well, thanks guys for sharing. So I guess let's just jump right into it. It certainly feels a little bit like crypto vol markets are kind of stuck in the dog days of summer here. I mean, before we even hit record, Simran is like, realized vol is like in the 0.55th percentile over the last, couple of years or what have you. So, I mean, vols across the curve, absolutely smashed. Pretty non-eventful day, for coins post FOMC. I mean, the amount of conversations that I've had with people were just like, guys, we are just bleeding. We need these goddamn coins to move. I mean, implieds are in the 30s, realized vol in the mid 20s. And if you look at, the paradigm flows, the market's certainly gone, a bit quiet outside of some of these headline flows. Generally volumes are kind of down, across markets given the lack of volatility. I mean, kind of like the headline print in BTC, is this SEP 2635 bull risk reversal. But I mean, you look at these contract sizes versus, some of the flows that we were talking about, back in March, like this number one print of 825 contracts wouldn't even make the top 5, right? And in Ethereum, we have some of this March 1900, 2800 call spread, being bought, at the money lower strike. But, this is kind of, I don't want to say like systematic flow, but, kind of systematic flow, to be honest. So I mean, quiet markets when vol craters is, I mean, you guys have backgrounds in other asset classes. This is not a pattern that is unique to crypto vol. It happens in equities, happens in other markets as well. So, I mean, I guess to start, I mean, what have you guys been seeing, in terms of your OTC franchise? Would you echo kind of a similar sort of pattern where there's kind of a bit of apathy in markets?
Yeah, I would say a lot of it's driven by, as you mentioned, the summer lull and lack of activity in general. And then also just realize while failing to perform, I think has just gotten people in a sense of doldrums and asking the question, where do we go from here? And there's a bunch of competing narratives that are kind of guiding that discussion, right? One of those is obviously the news around the spot ETF and what does this mean for the broader macro system. One of those narratives is the Ripple lawsuit case and what are the implications for altcoins and securities. And I'll definitely defer to Matt on both of those in terms of the nuances and particulars. But just from a pure flows perspective, I mean, there's certainly been some speculative upside. I think even, last week or earlier this week, I saw the 100K strike trade in March 2024 in small size. And so, even if people are taking smaller punts, I think they are still taking some punts. And I was actually talking to our OTC traders earlier where, the June, for example, 100K digital, we could probably offer it at like 3.5%. And so risking 30K to make $1 million sounds like a great trade. The question is, what does the path from here to a year from now really look like, right? What are the implications of the spot ETF? And then, as I think you guys have covered quite well over the past few episodes, the call overrider within, in terms of Ethereum call overriding was really the major vol flow that we've seen in the market over the past few months. And then having to buy all of that Vega back, I think it was around 300 or 400K Vega that was bought back at a, loss of like 8 or so vols. That much Vega entering the market and leaving the market begs the question, well, are there any other flows that are really going to happen over the next, few weeks to a few months? And I think most folks are just keen to sit on the sideline, see what market microstructures evolve. And once they have a little bit more certainty with regards to spot ETF, the implications on altcoins, and then also a little bit of the Binance FUD that still exists after the SEC actions, I think that's when you're going to see more of a revitalization in terms of volumes, actual expressions, to your point, putting on more size. Okay.
Yeah, it makes sense. And before we bring Matt in, I want to show just some of this, some of this work we put together to, effectively, quantify, the relationship between, crypto option block volumes and volatility, because it's certainly something that people talk about a lot. And but we kind of wanted to, quantify this relationship because we kind of have access to this sort of proprietary data. So what we did is we looked at the relationship between Paradigm crypto option block volumes in USD notional. So that's on, that's on the y-axis versus the changes in volatility on the x-axis. And we proxy this through Amber Data's DVol index, where, if you guys don't, your viewers don't know, it's kind of look at it similar to like a VIX for Bitcoin. Your methodology is a little bit different, but kind of consider it that for this process. And given the noisiness of Paradigm volumes versus daily changes in DVol, we kind of realized we needed to smooth out this data a little bit. So we took the 7-day moving average of Paradigm option volumes, as well as the 7-day moving average of the DVol index level. And then in step 2, we calculated the daily changes of both of these 7-day moving averages. So the daily change of the 7-day moving average of the Paradigm option volumes and the daily change of the 7-day moving average of the DVol index level. A little bit of a mouthful, but we took those daily changes and then we regressed them against one another in just a simple OLS regression, univariate regression. And the relationship here is pretty evident. It's not surprising, but it is interesting to kind of see these numbers where, uptrends in implied volatility as proxied by, this DVol index is leading to uptrends in Paradigm volumes and vice versa, like what we're seeing now. Downtrends in implied volatility, like we're seeing now, is leading to significant trends in Paradigm volumes and crypto option volumes, holistically. And kind of just looking at some of the stats from the regression. So we have an R squared of 0.35, and so 35% of the variation in the daily change of the 7 DMA of paradigm volumes is explained by this change in the devol level. But the T-score here is quite significant, right? So there seems to be this statistically significant relationship here between paradigm vol changes and devol changes. And, we include all the stats here, for you math and stat nerds, if you guys are curious, if you guys want to screenshot that. But, it kind of just seems like until the vols go up, volumes are not going to be a good place, according to this analysis, kind of, irrespective of some of this like overwrite covering that we've talked about. So I guess, Matt, like, if you could speak a little bit more, to these catalysts that are going to lead to this higher vol environment, because I feel like every week now I'm seeing all these, new price targets coming out where it's like, oh, okay, BTC, 150K before the halving and ETF, things like that. Yet we can barely even move $300 a day.
Yeah, I mean, I think a lot of the narratives actually kind of do remind me of 2020 again, though. When you think about from like the institutional side and when you think about the ETF side, a lot of that narrative that took Bitcoin from say high or like low 10,000s and that rally from late 2020 through 2021 to the high 60,000s was a lot around hype around Bitcoin ETFs. The prospect of a spot Bitcoin ETF kind of whittled by the wayside pretty quickly, but then Gary Gensler started talking about Bitcoin futures ETFs. Institutions started getting involved. At that time, I was still at JP Morgan, and you were hearing from my other side of the job about all these tech hedge funds starting to buy Bitcoin and the regular hedge fund, not in any sort of crypto-related vehicle. And I think that narrative is somewhat coming back with just the prospect of a Bitcoin ETF. And if that is something that eventually can become approved, and happy to spend more on the details there and go into that. I think it's just a narrative for the entire RIA community, a lot of communities that really don't have access to a great spot Bitcoin ETF vehicle to access this market. And that's in my mind, at least, a substantially larger thing, particularly when you're thinking about like BlackRock and the big name traditional investment manager brands like BlackRock. That's substantially bigger than, say, an RIA having access to a ProShares Bitcoin futures ETF, for example. It's just a night and day difference. So I really do think, to the extent I don't want to forecast probabilities of the Grayscale lawsuit and probabilities of Gary Gensler's decision making, but I really do think that's a substantially larger thing than almost everyone believes. It just also a lot of these wealth management firms, right? Like they function on like passive approvals for these types of products on like a name brand basis, where if you already are approved to offer iShares products to your clients, you're going to be approved to offer other iShares products to your clients. And that's not a universal thing, but I know it exists in certain places, and maybe it makes slightly different rules for crypto, but it's just substantially easier for people to put client assets in a product that comes from iShares.
Matt, would you have any kind of feel for the kind of potential timeframes we'd be working with or looking at for a BlackRock ETF to be approved?
Yeah, so there's a lot of moving parts here because the Grayscale lawsuit's a big component here. The last I've heard, there's not any particular deadline. A decision in the appellate court is expected in Q3. So people were saying it could be any week, it could be any day. It also might be a couple months. And then from there, that is something that then could be put up to the Supreme Court by either side to the extent the Supreme Court accepts that case. But that also is not even make things even more complicated. Let's say Grayscale wins and the SEC doesn't appeal. That does not give a blanket approval for Grayscale to transition into an ETF. What it does is it basically just takes away the SEC's prior rejection. So what would happen from there is effectively the SEC would have three paths. They could try to renege on their past Bitcoin futures ETFs, which I think is pretty unlikely considering they just approved a 2x leverage product. They could approve the product. That's another one. Or they could try to reject the product on some other grounds than the current grounds that they've been rejecting products on for roughly the last 10 years. So that means there's kind of a very uncertain timeline there with like, does the SEC win? Do they lose? Do they appeal? What do they decide if they lose? There's that set of timelines, and then there's an entirely different set of timelines related to the ETF filings. That was, it was catalyzed by BlackRock, and that was a really big deal because they had never filed before. There was very little information leakage that they intended to file. And then all these other asset managers that had filed previously in 2021 followed on and filed behind them. And that's more a function of trying to get in the SEC's review queue. So effectively, once all these filings got recognized by the SEC in the past week, they have at most 240 days to reject them. They have to go through a series of extensions to get it to that 240-day window. But effectively, let's say there's a max 240-day window from about, but that timeline can be pulled far forward depending on how the SEC grayscale case goes. And I know, sorry, I apologize, that was a very long-winded answer, but there's, I guess, two very moving components here, and it's kind of hard to forecast an actual date, but it could be soon, and it really couldn't be later than 240 days. Let's say that.
Yeah, well, I mean, you kind of just taking this back to the vol pricing, right? I mean, Simran, you look at this, and that bottom chart is the 25 delta skew, and I look at where that skew is trading, around the dates of that potential approval. And we're in a place where the BTC calls are trading, 6 vols, over the puts. So it certainly seems like, the pricing is there for, a potential rally. At least this is what the vol markets are pricing, not saying that we need to have one. Where even across the curve, we're at the low point of the range. You could make an argument that we are breaking lower. I mean, we did close a candle last week before below 30K. Yep, we're kind of in a place where it definitely seems where, the pricing is, the pain is kind of, to the upside. And at least that's that's kind of what the vols are pricing there. But kind of just relating the crypto derivative volumes to this ETF. Let's say this ETF gets approved, right? What does this actually do to crypto derivative volumes outside of, options on this ETF? And I'm sure I understand it brings clarity, but like when I think about like an exchange like Deribit, where it's just like, okay, as soon as this ETF gets approved, there's going to be options that get listed onto this ETF in like a month or so, or whatever that, minimum window is required. Wouldn't just all the volumes just go into options onto this thing? Like, I guess, what is your like longer term sort of view to some of these crypto native, sort of exchanges if you do get this ETF?
Sure. So I would be very surprised if you don't see a flood of interest and adoption from your traditional players entering into the crypto derivative space. I think that's kind of going to be the inevitable trend. And to your point, one of the trends that I expect to see off the back of that is probably a flood to liquidity on venues like CME, right? Deribit tends to be crypto native, and that's where most of the predominant volumes are. But for example, if I only need to post 35% margin to have a derivatives position on CME, and I can get paid 4.5%, 5% on my collateral, and I can trade with the likes of Citadel or Cumberland or any of your traditional TradFi institutions that are entering into the space, I would be very surprised if the natural evolution of the space doesn't bring about a flood of volume into those venues. And then also, I think you would just expect to see more overall volume on traditional institutions, on traditional exchanges like Deribit as well. I think that's kind of just going to be the overall trend. As for what the timeline of that looks like, again, I think to Matt's point, the actual specifics of that might be uncertain, but within a year from now, if you can make some relatively cheap punts, and some of those, to your point, are priced in, and it's quite interesting, right? Because typically, I would say the predominant flow in crypto just tends to be yield capture and selling covered calls. So whenever you see this upside convexity and calls trading over puts, it's like, oh, it's quite eye-opening in the sense of like, oh, people are actually willing to take a speculative view and do so in size to invert what is the normal skew that you normally see in the option flow market.
Yeah, I think that makes sense. And I think for David, do you have anything to say, or it looked like you were about to say something?
Just agreeing with that. I mean, we've spoken before, right, about this idea that in the absence of any conviction, certainly to the upside, then the more sort of programmatic type flows, these overriding flows and vol setting strategies are just kind of constantly kind of way. So it's in a market that's not doing anything, and spot's been very rangy, vols keep grinding lower. The two things that have stood out to me, number one, the pattern of our flows that we're seeing on Paradigm haven't really changed, right? We're still seeing, people wanting to sort of buy a top side and sort of make that play, albeit in not huge volume anymore. It's kind of patchy. But then also it is quite interesting that, as we're saying, that you're seeing, the skew in favor of calls, which kind of speaks to actually probably better underlying sentiment for this space than what if you're just looking at pure A, volatility, or B, looking at where the spot market's trading. You kind of think, well, no one's got any conviction, but actually those kind of underlying measures maybe speak to something a little bit more positive.
Yeah, and David, I partially agree with you kind of on the flows. I think from like a directional standpoint, yes, we are still kind of seeing more of the same where, people want to own these upside wings. I mean, I'm just staring the SEP 2635K bull riskies. We've been seeing bull riskies trade, pretty much the entire year, as well as, 1 to 3 month 25 delta outright calls, more so in BTC than Ethereum. But moving back to Ethereum and what kind of Simran was alluding to around this overrider, I would argue that the flows that we are seeing from market makers in Ethereum have changed dramatically over the past month, absolutely dramatically. And we call this slide, so the great reversal of Paradigm's ETH Vega flows. So even though the recent market flows have been generally quiet, we have seen this pretty considerable shift in Ethereum volatility dynamics over the past couple months. And this shift really occurred primarily due to this imbalance on Paradigm between Vega supply and Vega demand. And this is primarily driven by what Simran mentioned, this massive Ethereum overrider who significantly loaded up on risk, then subsequently covered a ton of their positions. So to be clear, this overrider does not trade on Paradigm, which is why we feel we can talk about these sort of flows. But let's look at the transformation of the data and the amount of Ethereum Vega that's being traded on Paradigm by Strike. So that as the overrider added positions with market makers off of Paradigm, market makers came in and hedged this risk by selling at the monies with a preference for this 1900 strike. So that left chart shows the Ethereum strike distribution of net taker Vega that is being traded between the dates of April 30th and June 20th. And this is primarily the range where a lot of these positions were being added, right? So we see that, as the overrider was adding their short call positions, market makers were then subsequently selling at the monies against this position, right? Own the upside, sell the at the monies against it. Mostly in the September and December expiries where a lot of this flow was concentrated. There was a fair amount of flow in March as well, but kind of just for liquidity reasons where we saw most of the hedging in September and December. So then what happened? So spot rallies on the XRP news. This entity starts covering all their risk. And we even saw it today. I mean, you see all these December 2300s, going up today before we started filming. And, rather aggressively, these guys are covering. And now take a look at the same Vega chart over the past month as the market maker unwound their risk. Well, now all these short at-the-money hedges that these market makers are putting on are now being closed out simultaneously as the overrider is covering out their longer-dated risk. So in terms of Ethereum flows, especially in the longer dated space, the flows on Paradigm are pretty much exactly mirroring what we're seeing from this overrider. So kind of like getting a sense of what this overrider is doing is literally at the top of mind of all our market makers. What is this guy going to do? Because if you know what this guy is going to do, right? Well, you kind of have a sense of what the vols are going to do. I mean, I just kind of look at the December 2300. I looked at that fixed strike move today. They covered like 25,000 of these things, right? So we see a lot of our clients trying to form, a strong view around this. And, that's part of the reason why we talk about it so much. It kind of seems like we're beating it over the head with a dead horse, but like it's literally at the top of mind of kind of like, all these guys that are trying to manage these books.
I was just going to say, I mean, this very much reminds me of when oil producers are beginning to hedge, right? When the country of Mexico is hedging, pretty much all the banks will know, because puts-Q becomes well bid, right? People are either building inventory or they need to hedge. And so having a sense of this predominant flow in the market, and the fact that it can move implied vols for ETH to trade at a discount or even close to parity to BTC seems mind-boggling when you look at it over the past, year and a half or 2 years. It's like, yeah, ETH should always trade at a premium to BTC, right? Yeah, unless someone is selling 400, 500 K Vega into the market, and that is really the only flow going through because there's no other broader narrative and someone just wants yield generation. But yeah, to your point, I think like having a sense of what this operator is doing, I think, and it really being the only predominant flow outside of any speculative upside buying in BTC is really what causes distortion to happen and kind of drives what makes the most sense.
Right. And, it's been pretty interesting to kind of see some of this action that's been occurring on screen, right? Because, they obviously loaded up on all the risk in Q2. We have this move, long dated vols kind of jack, and it's not really deltas, right? I mean, just the long date, they were selling long dated vols at the lows, right? They were selling long dated vols at like 44, and these things ratcheted up to, 50, 51. And, there was kind of this sense of kind of panic covering that was going on, I don't know, maybe it was a margin issue, like maybe it was Deribit telling them to cover. Like, I have absolutely no idea, right? But what it's kind of interesting is, yes, they're covering a lot of the decent March flow, but it kind of seems like there's some program restructuring going on, because we're actually seeing, and, it's not confirmed. It's tough to really confirm this stuff, but it seems like they're buying back the August and then selling September. So it seems like they're actually putting, fresh positions on. So when we saw this flow a couple weeks ago, we were like, all right, this program's over. These guys kind of blew up. But then at the same time, like, I don't know, like overwriter programs tend to be, pretty sticky. And like on the other side of this, they are kind of making money on the coin, right? I don't know how much Ethereum is up here to date, but like they are making money on their coin, and these programs just don't go away. Like if you're selling vol like on the lows of spot and vol, like yes, you could get whacked for sure, especially when you're crystallizing losses like this. But like when I used to see this flow in equities and other asset classes, it's not like you take a bad hit and the thing just completely disappears. I don't know. That's just my thoughts on it.
Yeah, I feel like people also just tend to have very short memories, and to your point, people will continue to sell vol pretty much in most free games. And we saw this in oil in 2020 where a lot of vol selling strategies blew out, and then you wait a year and a half and then people resume. And I think memories in crypto tend to be a little bit shorter than even that, because the scale and pace of things is just far faster for them.
Right. Okay, David. So let's shift over to the macro. Obviously, a big week in terms of macro, right? FOMC, what have you. But at the same time, it kind of seems like equity earnings, are mattering a little bit more than what's going on in the macro landscape between all these central bank meetings.
Yeah, I mean, I think we spoke before we came on, came on air. Market expected Fed to hike 25. They've hiked 25. Market expected the ECB. They've done it. And like all these things as well, you might have this little flurry of sort of volatility pricing or into the events, and then as soon as the event passes, then vol sells off, and then we're back into this drift. I think at the moment, I mean, from the Fed, there was nothing really new. Sort of keeping this data dependency. I actually thought there was some sort of dovish elements to it, particularly Powell classifying current policy as being sort of tight. He was never gonna kind of lay a pause on the table. He needs to keep optionality to keep hiking, and I kind of think we got that. But it puts us in this what I described in the macro pulse this week as this kind of macro purgatory, where we kind of come in towards the end of this hike cycle, both with the Fed. I think the ECB are nearing the end of theirs as well. But yeah, we've got this kind of data resiliency that's not allowing central banks to really sort of kind of ease up and relax. So we can't fully embrace this changing macro cycle as we move from the hikes to the pause and the cuts. So we're kind of in this state of purgatory where we're waiting to embrace a new regime, but yet the resilience of the data, the lack of central banks to be able to really kind of pivot, if you like, is just keeping us stuck. So we started the year kind of pricing the I guess the slowdown in the hikes towards the pause, and we've kind of seen that play out. But yeah, we're now in this sort of period where we're transferring from one regime to the other, and I kind of think that's why this sense of apathy, because it's really difficult right now to pick up on a solid narrative to really kind of strap on risk with any conviction. So hence we're in this kind of rangy market, waiting for that new catalyst. Now, what will that catalyst be? I guess a material downshift in the data that starts to put rate cuts back on the agenda, which we've obviously been kind of, we had rate cuts priced in for this part of the year earlier on. We're now obviously sort of taken those out, and that they've been pushed into early next year. So if we start to see that downturn in the data, then things pick up again. But we're back to data watching. The central banks are telling you they're looking at the data. So yeah, it's just really, I think everyone's frustrated at the moment because there's just not enough to really hold on to really sort of put some conviction on for the top side. At the same time, I don't think there's anything out there that's making anyone worried about the downside, and certainly we're not seeing that. If we look at our flows on Paradigm, there's no particular sort of rush to put on any bearish trades. So yeah, it's just a little bit frustrating. Other things that I've really got my eye on, I still think China is a potential catalyst for a little bit more volatility. You're seeing quite a deep slowdown there, and you're actually seeing quite a deflationary backdrop. And I always say, China, world's biggest exporter, when they're in this disinflationary world, that they start to emit that across the Western world. So I'm still kind of feel pretty confident in this peak inflation, peak rates narrative. I think that's why equities keep kind of grinding higher as well, because that's a pretty supportive backdrop for equities. It's a little bit frustrating that crypto's not joining that party. But one of the interesting things that we've spoken about is this idea as well that China want to ease, but they're also, they seemed happy to let the currency weaken, and then they've kind of hit the point where, okay, enough's enough, and they don't want to lose control of that. Some guys I'm speaking to, we're discussing this idea that maybe China are trying to sit on Bitcoin because they're trying to manage the capital outflow situation, and the one thing you can't have is Bitcoin, and actually we've seen it over the last couple of weeks with some of the busts they've made and people trying to fraudulently sort of get money out of the country via crypto. But yeah, the idea that maybe China's sitting on Bitcoin because it certainly seems like it just doesn't want to break higher, and it would make sense if you think that they're always worried about capital outflows. They've made noises around Bitcoin in the past. So yeah, I think China's interesting, and I actually think if you see the pressure on the currency just start to fade away, I'll be interested to see how Bitcoin reacts around that, and will that validate the idea that maybe China have actually been behind one of the things that's kind of putting a lid on Bitcoin. But yeah, we've learned, I'd say, nothing new this week from the Fed. Bank of Japan, yeah, I'm not expecting anything new from them tomorrow. So yeah, and then unfortunately we're back to data watching. So then we're going to have these little flurries of volatility around the key data releases, inflation, non-farm payrolls, and we're just waiting for a little bit more momentum on this macro regime shift. And until then, we're probably still in this range bound.
Yeah, David, you kind of touched a little bit around kind of positioning, where it's like you don't have that next impulse yet to kind of take us higher, but a lot of now, but the people that remain are pretty much all diamond hands. I mean, Matt, do you guys do any work in your research around like positioning and things like this? Like, do you have a sense of, like, obviously as we discussed, this ETF gets approved, you're gonna get potentially this new wave of like fresh capital, but like in terms of like existing or crypto allocation from that existing sort of base, I guess, where is your sense of where that positioning lies?
It's certainly not data we have great granularity into. So there's not really a ton I can say in terms of like what the like trying to quantify the magnitude of flows from sort of the traditional finance ecosystem into a product like this. I guess you could say, like BITO, it raised 1.5 billion on, I think, day one when it launched. I do think you'd see something substantially larger than that. But yeah, it's hard to speak with any real precision there. You can look at sort of like the gold ETF, which is one of the largest ETFs in the world, and that was sort of the first time to make it really easy for the average retail investor to own physical. That is something that it grew it was one of the largest releases ever, but then just continued to grow for the first for a really long time actually. And so I think it could be something like that where you get a few $1 billion in a product immediately, and then you still have sort of a lag phase for investors to actually like do due diligence on the space, because it could be the case that they just look at, we have Grayscale already has all these problems, we can't touch it. We hear about all the problems with Bitcoin futures with the pretty persistent negative carry, and maybe they haven't done any due diligence yet for that reason. But yeah, I'd say that's unfortunately not like a great granular answer into the numbers, but you can get like I would say a little bit of precedent from GLD and BITO.
Right. No, that totally makes sense. Yeah. Sorry for putting you on the spot there. If you don't have the data, I was just honestly curious. I'd imagine
Joe,
very difficult to come by.
Yeah, Joe as well though. I mean, I spent years on foreign exchange desks, and God, we used to fill out so many of these positioning reports, and everyone was trying to measure positioning. Everyone looks at CFTC, which is kind of a bit of after the fact, and only really tells you about how the momentum guys are positioned. So it's difficult in a way, and I think it's particularly difficult within crypto that perhaps doesn't have such a broad range of measures of these things. So yeah, we're all kind of going off of anecdotes from the people we speak to, the things we see, and you tend to find out once you see a massive move, you go, oh shit, people weren't positioned at all.
I know, exactly. Simran, so I mean, GSR, obviously a big shop in altcoins. Paradigm, not a big shop in altcoins, as we do Bitcoin and Ethereum, crypto derivatives, but there's not really, at least in listed markets, outside of, Delta One products, of course, more on the options side, there's not really, anything at least listed. So I'm curious kind of like what you're seeing on the OTC side, or, kind of just within your franchise generally around, interest in altcoins.
Sure. So I think a lot of it's typically driven by whatever idiosyncratic theme is going on, whether it was the Litecoin halving and people trying to spec based on that. Obviously, a lot of interest post Ripple announcement. I think most recently, there was some interesting upside for Maker. So it really is driven by whatever idiosyncratic narrative is driving a particular ecosystem. But yeah, I mean, a lot of the predominant flow typically, again, tends to be yield generation and call overriding, which is kind of the bread and butter of most crypto narratives, for lack of a better word. I think most retail, though, is still attracted to perps, and so that's where a lot of the liquidity is concentrated. But even with altcoins, not moving around a lot, similar to majors, vol still feels relatively cheap. So if someone's willing to pay 90, 100 vol for, a 3-6 month option, it's not impossible to get some liquidity around it. But I would say volumes are generally muted, similar to majors for the most part.
Right, and that makes sense in terms of even how I don't even know how you begin to even price these things. Kind of just do a all shift versus Ethereum view, right? I'm curious where you see kind of like the next big opportunity and like the evolution of crypto derivatives, where, kind of just like how any other asset class, derivative markets start, you start in the Delta One products, and then maybe you have vanilla options, and then things start to expand out there as, new players come in and you kind of get some decent two-way flow. And from there, things go to structured products and potentially exotics. I mean, I guess like kind of, where do you see kind of like the next big opportunity for the space?
Sure. So I think the two major drivers, when I take a step back and look at the bigger picture, are probably just going to be broader traditional institutional adoption, just bringing more flow into the makers, and that, driving adoption on Teeny and other centralized venues like that. And then I think on-chain developments that are more capital efficient are probably going to be the the bigger drivers, right? You have innovations like DVIV and EVIP, which are similar to, I think, the DVOL index that are meant to replicate the BICs for Bitcoin and Ethereum, and you can build all the structured products you want. But when there's not sufficient liquidity in the underlying tokens that you're trading, or even sufficient liquidity in the linear space, right? The fact that we don't even have an active dated forward market for altcoins, it's kind of a shocking thing, right? So to try and trade derivatives around those when you don't even have a proper linear market feels like putting the cart before the horse. So I think it's really going to be broader traditional institutional adoption and simply more convenient and capital efficient ways for on-chain spreadsheets of complexity are probably going to be the biggest catalysts that drive both retail and just broader use case. But and I think the evolution of, you hear this all the time about real world assets and tokenization. I wouldn't be surprised if you begin to see derivatives trading on real world assets and tokenization on chain as just an extension of, if people want to take a punt on Tesla on Robinhood, there's no reason why they may not want to do it on chain if they can get similar, I would say, convenience and do it in stable land rather than having to set up a brokerage account, for example.
No, that makes sense. That makes sense. Okay, awesome. I mean, I'm just looking at the time here. We're kind of at that 40-minute mark. So, I mean, guys, that was a great conversation. Really, really enjoyed it.